In today's video, we're going to answer the question, what is standard deviation? And we're going to look at the standard deviation meaning in stock investing. Hi everyone, my name is Helen. Welcome to my channel. In today's video, we're going to answer what is standard deviation, and we're going to specifically be looking at the standard deviation meaning in stock investing. Now, before we get started, I do have to note standard deviation is used in a multitude of different industries. So it's maybe used in mathematics, statistics, engineering, sciences, finance. There's several industries where you use standard deviation. So do keep in mind that for the purposes of this video, I will be specifically talking about standard deviation used in finance. However, this still applies in other industries when it comes to what it is and how it works. So feel free to keep watching if you are from another industry and you are thinking about how this works in your industry as well. So let's just jump into it. Before we start talking about what is standard deviation, we need to start with why is it important in finance. When you're looking at stock investing, standard deviation plays a critical role when it comes to risk analysis. That means that it helps you determine how risky the stock is. So if you're looking at stock market returns and you see that there's a high standard deviation, that means that that particular stock has very volatile returns. When you are looking at something that has a low standard deviation, that means that the returns are relatively stable and not as volatile. Of course, you do have to keep in mind that when it comes to any kind of stock or any kind of investment, that the past performance does not predict the future outcomes. So in the case of standard deviation, it gives you a perspective on how risky the stock has been in the past, maybe 5 years, 10 years, depending on what kind of chart you're looking at. But it does not necessarily mean it will have the same trajectory going forward. Bearing that in mind, however, it does give you a pretty good overview of how a stock is likely to perform based on previous performances. So it does give you a little bit of a view of how risky that stock might be. Now, when you are looking at standard deviation and how risky a stock is, the standard deviation is not the only thing and the only factor you need to look at to determine the risk. It is only one tool that you use to determine how risky a stock is. If you keep that in mind, you can use standard deviation as a very critical and important part of organizing whether or not to invest in a stock. So that brings us to what is standard deviation? Standard deviation is a measure of a set of numbers. It determines how much the numbers are different from the average or the mean of that number set. So if you have a number set with let's say five numbers. In stock investing, maybe it's a 5-year return. So you have 5 numbers and then you add those together, you divide by 5 and you find out what the average or the mean of that specific stock is. That's your baseline. Now, depending on how volatile the stock is, it may have a standard deviation that is very high, or it may have a low standard deviation. Now, what does that mean? So when you have a high standard deviation, it means that the numbers in a number set are variable when compared to the mean or the average. So they may be very far away or in either direction. So they may be higher than that number and lower than that number, but it's very up and down. And that's the thing you have to keep in mind. It is all over the place. Now, if you have a low standard deviation, that means that the numbers in that number set are actually cluttered around that average or mean. So you might have a low standard deviation where your average is, let's say it's 12, and your variance in that particular number set, maybe you have as low as 10 and as high as 13. But if you notice in that particular number set, the numbers are very close to that average. In a high standard deviation, rather than being close to the average, the numbers are all over the place. So you might have minus 30% in one year, and here it's up at 40% in the next year, and somehow it comes out to be an average of, let's say, 12. But the numbers are extremely variable, which means that that particular stock is very volatile. The returns on that stock are all over the place. So when you're looking at standard deviation in stock market investing, what should you really be paying attention to? What you want to pay attention to is whether the standard deviation is high or low in comparison to the average or mean. So if you see a high standard deviation, that means that your numbers and your returns on that stock are all over the place. If you see that the number is low or that it's very close to the average, then that means that that stock is not very volatile. It has a relatively low risk in comparison, and the numbers on that, so the returns on that particular stock, are not all over the place. They're pretty much around where the average falls. And if you guys like this video, please do subscribe. But if you want to take anything away from this video, if there's one thing I can tell you, pay particular attention to, it is that phrase, all over the place. If the numbers are all over the place, that means you have a high standard deviation and it is a volatile investment. If the numbers are not all over the place, if the standard deviation is low, that means it's a relatively low risk and it's not as volatile, so it's a little bit more stable and predictable. Now, this does not apply to all stocks, and of course, the past performance does not predict the future outcomes, but your takeaway in this particular video should be high standard deviation is riskier. Lower standard deviation is not as risky. And for this set purposes of this video, because it is a little bit difficult to understand at times, or you might even find it a little bit confusing, do consider watching this again just to make sure you fully understand, because this is very important in risk analysis and research when you're looking at stock market investing. So if you like the video, please subscribe, and I will see you in the next one.